A turnaround in tourism-related stocks like aviation and hospitality is on the cards this year in Singapore. Experts say the COVID-19 vaccine rollout will lead to a gradual return to travel. And they say stocks leveraging economic recovery, like consumer and transport-related stocks, will also see a lift. Brennan Tanoto has more.
Analysts say Singapore's benchmark Straits Times Index, which is often viewed as a barometer for how well the local stock market is doing, is expected to land at around 3,200 points at the end of this year. This means a return to the level the STI was at before the pandemic struck, and an improvement from the 2,200 points low seen around April last year when the country's circuit breaker kicked in. The optimism stems mainly from the rollout of the COVID-19 vaccine, which according to analysts could see travel restrictions lifted. The plan is to have enough vaccines for everyone in Singapore by the third quarter of 2021.
When the borders will reopen and it's safe again for traveling, there's going to be some of this pent-up demand that could help to drive really prices up, make more of this cross-border activities safe again, and therefore be a boost not just to some of the aviation, but retail and other consumer services alike.
Now that's likely to boost stocks like Singapore Airlines and ComfortDelGro, for instance, which have been hit by the decline in tourism. Meanwhile, tech and healthcare stocks will continue to see a good showing as businesses digitalize and the demand for medical equipment continues. As to whether job cuts and the ongoing economic uncertainty could put pressure on liquidity, experts believe it won't be the case.
We've seen massive job losses and tremendous economic difficulties in developed markets and emerging markets, but in both cases, in both asset classes, there has been a solid rally in financial markets, and this has been created by the very low interest rate environment that we've seen as a response to the crisis. Therefore, we need to see the financial markets as a slightly disconnected entity, and we could see financial markets continue to rally in 2021 as the recovery takes hold.
Government measures have helped Singapore avoid a spate of firms closing down and high debt levels. These include schemes that help to cover up to 75% of local employees' wages, as well as rental reliefs that help with cash flow. These support the optimism in the local stock market. The central bank has eased its monetary policy in March last year to boost consumption as the economy reeled from the impact of the pandemic. The government's also committed about $100 billion in COVID-19 support measures.